Welcome to a fresh episode of Legal Wrangle, where we will track major judicial developments taking place in the last few weeks in the realm of domestic taxation. For this, we have selected three important cases. The first one deals with the validity of the belated remand proceedings in the case of block assessment. The second one deals with retrospective application of refund provisions. And the last one deals with effect of transaction in the name of managing trustee on the charitable nature of a trust. The taxpayers aren't commoners but businessmen accused of involvement in black money racket being run by shell companies. They were found guilty in a money laundering case pertaining to hawala transactions involving senior politicians and government servants. A former senior CBI official was also convicted by a Delhi court for accepting bribe for not invoking TADA against the taxpayers in the controversial 1991 Jain hawala case. Now let's understand what exactly happened in this decision. In the instant case, the block assessment was completed pursuant to search seizure operations. Not satisfied, the assessee approached the CIT who granted partial relief. The ITAT simply remanded the issue to the AO who recomputed the tax effects under section 153A by following the ITAT's order, and the remand proceedings were completed after a period of 21 months. It was therefore urged before the High Court that the remand order was per se illegal and thus void. The department was, however, of the opinion that the order was made within the prescribed time frame, and the assessee deserved no hearing as they did not attend the queries and cooperated in the assessment proceedings which got delayed.
Let's now see what the final outcome was. Remand proceeding in case of block period concluded after expiry of 9 months time frame as per section 153 get time barred and hence invalid. Here are the key takeaways. Period of limitation for completion of assessment under remand proceeding commences from the date the DR concerned nominated by Revenue Department receives a copy of the order. Non-obstante clause under section 153 which prescribes specific period of limitation to complete search assessment in case of block period overrides the general period of limitation. Period of limitation prescribed for completion of remand constituted a special provision which applies to every class of remand regardless of whether they originate from assessment, reassessment, revisions or search seizure assessments.
Now let's move on to our second case, where the High Court was approached challenging the action of the Income Tax Department in withholding refunds along with the statutory interest payable under section 244A against the excess tax adjusted by them. Now let's understand what exactly happened in this decision. In the instant case, the assessee trust has sought refund of the tax recovered by the department under scrutiny proceedings, which by virtue of the order of the CIT had become refundable. However, the department did not grant such refund, stating that an appeal against the CIT's order was pending. When the appeal before the tribunal brought no relief, the department approached the High Court. In between, the assessee wrote to the CBDT and complained about the department not giving effect to the refund order passed by the CIT. Noticing this, the High Court directed the department to initiate refund, and pursuant thereto, an order was passed along with the statutory interest under section 244A on the principal sum required to be refunded. Still, however, there was enormous delay of 9 years on the part of the department in refunding excess tax adjusted by them. The assessee therefore approached the High Court, pointing out that no interest under the newly inserted section 244A was granted to them for such delays.
Let's see what the final outcome was. Remedial provisions like section 244A 1A not to be applied retrospectively to grant relief to an aggrieved taxpayer for inordinate delay in granting refund. Here are the key takeaways. Subsection 1A of section 244A provides for additional interest at the rate of 3% per annum upon the AO failing to pass an order giving effect to the appellate or revisional order within the time frame. Provision of section 244A is remedial in nature and meant to address the issue of inordinate delay in giving effect to the appellate or revisional orders made in favor of the assessee but not with the retrospective effect. The claim for additional interest cannot be granted for the periods when the provisions of section 244A 1A and 153(3) as they stand now were not in the statute book at all.
Now let's move on to our last case, where the registration granted to the assessee trust was proposed to be withdrawn on the ground of alleged violation of the provision of section 11 and 13. Now let's understand what exactly happened in this case. In the instant case, the registration granted to the assessee trust was withdrawn by the DITE by noticing that an amount was transferred by the trust to one of its trustees and his sons, who had in turn paid a sum to one Sonal Ben Jaksania towards agreement to purchase land from her. It was averred that no sale deed was executed so far, and also the transaction with the trustee Muktab Kapadia and his son was not reflected in Form 10B. Therefore, the DITE opined that the trust had thus concealed the actual mode of transaction and transferred the funds to a trustee. It was also opined that the land proposed to be acquired by the trust is an agricultural land which was not yet controverted into non-agricultural use. Thus, the trust had diverted its funds for the purpose of agriculture and hence rendered ineligible for Section 12AA benefits. When the matter reached IT80, it was held that the purpose of acquiring land was for expanding educational activities of the trust, and payment was made to the landholder, which was accounted for in the trust account under the head Advance towards Land. Therefore, since the land was purchased not for the investment but to set up educational institution, there was no case of altering the objects of the trust.
Let's see what the final outcome of High Court was. Transaction of purchase of land in the name of managing trustee, where such land is to be used for setting up educational institution, will not take away the charitable character of trust. Here are the key takeaways. An agreement to purchase agricultural land in the name of managing trustee of the assessee trust, when such land is to be used for setting up educational institution, cannot be construed as violative of section 13(1)(c) so as to take away charitable character of the trust. Provisions of section 215, which excludes activity in the nature of trade, commerce or business in advancement of any other object of general public utility, cannot be extended to take within the ambit the remaining activities which were defined as charitable purpose like education.
With this, we wrap up this episode of Legal Wrangle. Next time, we will bring some interesting cases from the world of international taxation. Thank you for watching, and goodbye.